Hey, what's going on, everybody? Welcome back to my channel. My name is Jacob Restituto. I'm a musician from Northport, New York, and welcome back to another of these business and music videos. In these style of videos, I want to try and break down all different aspects of the music industry and how business and how being a musician is actually like running a business. A lot of musicians only use one side of the brain with the creative side, and they get screwed on the business side. So I want to help prevent that. So if you're interested in learning anything about business or the business of music, this video is for you. So that being said, we're talking about taxes today, all different aspects of taxes, how they benefit you, how they hurt you. I don't know if they really benefit you. Technically, I guess they do, because they build roads and they fund schools. So technically, I guess they benefit you. But most people don't like them. But let me just explain how they work. So obviously, especially with the elections that just happened, tax brackets are recently talked about a lot. Taxing the rich, not the poor, or taxing everybody equally. All these different things were talked about, right? So taxes are actually calculated in brackets, and most people don't realize, including myself for a long time, you're only taxed according to your bracket. And then so for example, I'm not going to put up the brackets or explain the different levels of the brackets, because you're all probably at different levels. So for example, I'm just going to give easy numbers. Say it's a $20,000 bracket, an $80,000 bracket, a $200,000, a $500,000, and a $1 million. So what happens is at every level of the bracket, you get taxed at that much. So say, for example, if you make $20,000, you're taxed at a 10% rate. For example, I'm just making things up, right? And then as soon as you hit the $80,000 bracket, then you're taxed at a 25% rate, for example, right? Most people assume that, oh, I made $85,000. That means I'm taxed completely on the $85,000 is taxed at 25%. That's actually not true. You are taxed at the first $20,000 that you made, you're taxed at the 10% rate. So for example, like I said in my example, if you made $85,000, you now have $20,000 taken out, because that's taxed at 10%. You have $65,000 remaining. Only that $65,000 is taxed at the 25% rate. Okay, so that's great. Now that you understand how the tax brackets work, now let's talk about write-offs and what they mean and how they benefit you. I'm going to make a full separate video on write-offs as a musician, just so you can be familiar with it. But here we go. So like, for example, say you make, let's do easier numbers. Say you make $100,000, right? But you spend $20,000 on qualified business expenses, right? Whatever that means, you got to do research to figure out what a qualified business expense is. As a musician, I'm not going to give complete tax advice, because, I don't want you to be like, oh, Jacob said, this is the case, and then the IRA is, suing you. And do your own research, of what's considered tax advice. And a lot of accountants will say different things, because there's a lot of gray areas. Made $10,000 this year, you spend $2,000 on a computer. So that means that technically you had an income of $10,000. Now, because you have a qualified business expense, you have an income that what they'll do, they'll say, okay, you have $2,000 worth of write-offs. That means that you have now $8,000 worth of taxable income. So there's this whole, like, that's why there's all these, that's what really accountants do, is they first of all calculate stuff, but they can also help you save money. So for example, like I said, the different tax brackets, depending on how much money you spent on write-offs, you can actually jump down tax brackets and end up saving more money. Not only upgrading your equipment, but you're also saving more money. Now also, within sides of being a musician, and depending on where you're located, everybody in the US pays federal income tax. But depending on your state, you pay different amounts. Some states have zero, like for example Nevada, and I think Texas and Florida. These have no state income tax, which is really cool. But the thing that stinks about being self-employed is you pay both something called FICA income tax, which is the Social Security and Medicare, Medicaid, one of the two. Again, I'm not an accountant. I'm just expressing what I know, helping you guys out just a little bit more. The thing that stinks is when you're employed by somebody, you pay your 7.5% roughly, and your employer pays the 7.5% roughly. So that goes to Social Security and Medicare. When you're self-employed, you are the employee and the employer. So you end up paying 15%, which sucks, on top of your federal, on top of your state income taxes. So that's something to also keep in mind. So what I highly recommend as a musician is, you're typically probably getting a lot of cash, and if you're typically probably getting a lot of checks and all that stuff, you're not paying the taxes right up front. Have a separate bank account that every time you get paid, you take like 20, depending on how much money you're making, 10, 20, 30%, and you just put it right in there. You make $1,000, put $250 into that savings account. You don't touch it. That's your tax savings account. I highly, highly, highly recommend you do that. So I'm going to make a whole video on the different types of corporations and what the benefit of having a corporation versus being just an independent contractor or anything like that, or self-proprietor or sole proprietor or anything like that. For example, an S corp, when you open one of those, you can actually take something called dividends. And I know we're getting real in depth and stuff, and you're gonna have to, like, you can feel free to ask me any questions. You could text me, anything like that. And numbers are below. Well, what a dividend is that's actually taxed at a different rate than your actual income. So, for example, you could take your regular payroll, your regular salary, you tax at that. And then you can get a dividend, which is actually taxed differently. So but you can't do that if you have a sole proprietorship. So that's a benefit of becoming an S corp. You have a whole extra level of safety, and you can take tax benefits. So like I said, you're working hard for your money. You want to keep as much of it as possible. So look at all these different things. If you didn't understand anything I said, Google it, text me, have a question, comment below. But I hope that these help you just, understand the music industry a little bit more, not get screwed, and I hope that you're able to keep a little bit more of the money that you worked so hard to get. All right, I'll see you guys next time. Have a great Restituto day. If you want to check out my music, it's Jacob Restituto. Wherever you listen, I'll see you guys next time. Peace out.